Welcome to Pro News Weekly. The dollar has surged, stock indices are retreating, gold is sending signals, and Bitcoin has hit bottom. Let's take a closer look at the latest developments in the financial markets. Kevin Warsh has stated that he intends to bring inflation back to the 2% target. However, he did not explain exactly how he plans to achieve this. Markets anticipated a tightening of monetary policy, which strengthened the dollar. In the derivatives market, the probability of a rate hike in 2026 increased from 60% to 85%. In addition, the chances of a hike are already above 50% as early as September. Warsh declined to provide his own rate forecasts for the so-called dot plot. 9 of the remaining 18 FOMC members expect rates to rise. This is leading to a rise in Treasury yields and the USD index. The remark by Kevin Warsh that the committee will ensure price stability sent stock indices tumbling. The markets finally realized that the Fed has reached a stage where it can no longer ignore inflation. This led to a fall in share prices. Among the hardest hit was the interest rate-sensitive consumer goods sector. The Fed's hawkish surprise proved to be a cold shower for S&P 500 bulls. More than half of investors surveyed by Bank of America believe the stock market is in a state of boom, whilst 21% voted for euphoria. The rally in the broad stock index had long been driven by FOMO, or the fear of missing out. The increased likelihood of a Fed rate hike naturally triggered a pullback. Gold fell in response to the FOMC meeting's outcome, but managed to recover most of its losses. The precious metal is reacting to the fall in Brent crude prices, following the end of the conflict in the Middle East. Donald Trump defended the deal with Iran, stating that he wanted to avoid an economic disaster. The precious metals reaction may suggest that the surge in inflation triggered by the oil shock is temporary. The Fed does not need to increase rates aggressively. Kevin Warsh made no mention of rate increases. The new chair may want the markets to do some of the work for the central bank by tightening financial conditions. Bitcoin, which had begun to regain its correlation with U.S. stock indices, fell with them after a hawkish surprise from the Fed. Before this, Bitcoin prices had hit a 2-week high. Standard Chartered stated that the digital asset had reached the bottom of the current crypto winter and had bounced back. According to the company, the rally was driven by the resolution of the Middle East conflict and by a successful SpaceX IPO. Investors had been withdrawing funds from the crypto market to set aside for the initial public offering. Now, capital is flowing back in. The easing of geopolitical risks is good news for Bitcoin. The key events on the economic calendar in the coming week will include the release of business activity data for the Eurozone, the US, and other countries. Coming up the same week are US GDP figures and the Personal Consumption Expenditures Index, the Fed's preferred measure of inflation, ahead of the 25th of June. Investors' attention will be focused on the release of Australian inflation and labor market figures, which will help clarify the RBA's future course of action. Markets will be adjusting and refining their expectations for the timing of the Fed's 2026 rate hike. It is quite possible that their reaction on Wednesday was too emotional. Keep up to date with the latest developments on global markets with Pro News Weekly. Like, share, and subscribe.